Okay, so Congresswoman Rashida Tlaib just absolutely demolished Trump's Treasury Secretary in a congressional hearing, and what you're about to see is a masterclass in how to expose the rigged system that favors Wall Street banks over community banks and everyday Americans. And the reason this matters so much is because while this Treasury Secretary is sitting there defending the big banks that keep failing and crashing our economy, he's simultaneously making it easier for them to take on even more risk while choking out the community banks that actually serve real people in real communities. So buckle up, because this is about to get intense. Let's watch what happened, and I will give you my take later.
Thank you. The gentleman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you. Mr. Secretary, a bank's leverage ratio is important, right?
Well, there are numerous leverage ratios. Congressman, which one are you referring to?
So, for the record, if I may, Mr. Chair, I'm going to submit the Bank Capital's Analysis Semi-Annual Update for the record. May I?
Without objection, so ordered.
I want to talk about the way that we look at global systematic important banks, what do you guys call it, G-SIBs, is that right?
That's correct.
That's what I'm talking about. They're banking organizations that could trigger a financial crisis if they failed, correct?
And they could trigger a financial crisis by not lending.
Yeah, so the leverage ratio is important when we look at it, right?
Again, I'm not sure which leverage ratio
Okay, so I'm
you're
looking at
referring to.
here, this chart, okay? It says Tier 1 capital. Does that help?
Tier 1, that's helpful.
Okay, so I know it's kind of hard to see, but the green line is the community banks. You see how high that cushion is? That it's about what, almost 11%? I know you can't see it. It's fine. I was going to enlarge
As an
it
act of
for
good
you.
faith, I'll take your word.
Yeah, so the largest bank capital analysis for the Federal Reserve Bank of Kansas City, it shows that last June, the Tier 1 leverage ratio of community banks was at 10.83%. For the banks that pose the largest threat to global system, what they call G-SIBs, this is the big banks, the ones who take all the risks. You know this, right? Their supplementary leverage ratio was about 5.8%. That's a huge difference, right?
Correct?
Okay, I'm getting there, I promise.
Okay.
Do you think the largest, most complex banks are roughly half are as risky in the threat that they pose to the financial system as a community bank in my district?
Well, I think, Congresswoman, that what you're neglecting to think about is the composition of the assets and the capital. So the capital at the G-SIBs can be much more liquid, where the banks in your community are much more, as we're used to seeing in the movies.
Well, let me explain to the public why community. Yeah, I understand. Community banks, though, lend out equivalent about 75% of their deposits to real economy. Some people refer to it as Main Street, but we call it the real economy, people, families, communities. The largest banks only lend about 40% of their deposits into our real economy. Instead, they rapidly expand their loans to hedge funds and private equity that you're calling liquidity, they can liquidate, right? Is that what you're saying? Is that what you're saying?
No, I'm also saying, saying they hold a much higher.
Yeah, but the big banks are the ones who keep failing, right?
What's that?
The big banks are the ones who keep failing.
No. Many small banks
Well,
fail
that's
too.
because they're getting pushed out. We're not actually supporting community banks.
Well, as I've said, I think more than 100 times today, I support community banks, and what I don't want to see
you could say it, but you got to do something about it. But listen, so Trump's
I've met with more than 200
I know,
community
Mr.
bankers.
Secretary, but this is pretty bad.
So
Because the fact that community banks in my business have almost twice as much capital percentage-wise compared to banks that pose the largest threat to our financial system, that shows that just how much playing field's tilted towards Wall Street. You understand that, right? That's where the risk is. The big banks do far less for our real economy, for everyday people, and that's what I'm trying to say, because Trump's regulators recently, finalized a rule to modify the supplementary leverage ratio that apply to the largest banks. Many former regulators and experts have warned that such step will actually undermine the safety and soundness of our largest banks. The final rule will result in a reduction of about $219 billion, about 28%, in capital at the bank subsidiaries of global systematic important banks, G-SIBs. My residents don't know this, but the thing is they end up with having to pay the cost when they fail. And so I'm just trying to stress to my colleagues how important it is, because Secretary, last November, Didn't regulators reduce it, again, the capital requirement, right? Yes or no? They
Again,
did.
Congresswoman, I want to be polite, not say it's naive,
Yeah.
what the road you're going down,
Mm-hmm.
but much of the excess capital has been invested in the U.S. Treasury market, and keeping those yields low helps the borrowers who want a mortgage or a small business or an ag loan.
But are you paying attention how much they are lending versus community banks?
Yes, we pay very close
really
attention.
low.
I've been a financial
isn't it
analyst
low?
for over 40
Do
years.
you agree it's low?
Sorry?
It's
No,
still very low.
It's not relative to the historical level.
Mr. Secretary, if you came to my district, you can go to Detroit or the suburbs, they will tell you the big banks do not loan to them. And if they do, it's predatory, it's not supportive. It's the local community banks that support them in owning home ownership and small
The
businesses.
gentlelady's time's expired.
Congresswoman, you and I are in complete
The
agreement.
gentlelady's time's expired. The
Except
gentleman
on-
from
except on the
California,
capital
Ms. Kim,
ratios.
is now recognized for 5
Look, what you just watched is the difference between a representative who actually understands and cares about the needs of working families versus a Treasury Secretary who spent 40 years on Wall Street and thinks that experience makes him qualified to lecture a congresswoman about what's best for her constituents. Rashida Tlaib came to that hearing prepared with data, with facts, with receipts, and she methodically dismantled every single one of Besant's defenses for a policy that makes our financial system less safe while doing nothing to help ordinary Americans. And the most important thing to understand is that this isn't just about banking regulations or capital requirements. This is about whose side our government is on, whether we're going to have an economy that works for everyone or just for those at the top, and whether we're going to learn the lessons of 2008 or whether we're going to set ourselves up for another catastrophic financial crisis because we valued Wall Street profits over financial stability and economic fairness. If this video opened your eyes to what's really happening with our financial system, hit that like button, subscribe to the channel, and drop a comment below about what you think should happen to these capital requirements. I'll see you in the next one, and remember, they're counting on you not paying attention, so pay attention. Thanks for watching.